Reserve Bank Governor Raghuram Rajan today again surprised the markets and raised key policy rates by 0.25% to 8% in a bid to curb inflation, a move that may translate into higher EMIs and push up the cost of borrowing for corporates. Consequently, the reverse repo rate under the liquidity adjustment facility will be revised to 7% and the marginal standing facility rate and bank rate to 9%. However, the RBI kept the cash reserve ratio unchanged at 4% as liquidity seems to be comfortable. It was widely expected that Rajan would maintain the status quo on rates to support growth. Ahead of the quarterly review, Rajan had termed inflation a destructive disease. The governor said economic growth would be below 5% in the current financial year and could accelerate in 2014 to 15 to a mean projection of 5.5%.
Today, on the basis of an assessment of the current and evolving macroeconomic situation, we've decided to increase the policy repo rate under the liquidity adjustment facility by 25 basis points to 8%. Let me first address the balance of risks that confront us in the evolving macroeconomic outlook. The slowdown in the economy is getting increasingly worrisome. Our current assessment is that growth is likely to lose momentum in Q3 of 2013-14, with industrial activity in contractionary mode, mainly on account of manufacturing. If you cut policy rates, it's not going to create a immediate reduction in the bank's cost of funds. It's not going to create an immediate filter through into borrowers' cost of funds. It's not going to create immediate demand. So we have to get away from the sense that there is magic to be done without bringing down inflation. Ultimately, the best way we can create growth and sustainable growth is by bringing down inflation.
Indian bond stocks and the rupee fell after the rate hike, and see that sharp dip in that chart at 11 a.m. The Sensex there showing how much of a reaction the markets witnessed after that announcement. Clearly a big surprise and shock there for the equity markets, but there was recovery that set in, with the Sensex recovering most of the losses that we had seen, finally closing 23 points in the red, the Nifty closing almost flat there. But again, that sharp dip that came in at 11 a.m. when the announcement came of a rate hike. Mixed reactions there as far as the banking stocks are concerned. The banking stocks had also reacted sharply. But after Dr. Rajan explained his rationale and gave an assurance that if inflation continues to moderate, there will be no near-term hikes, that clearly brought about some breather for those banking stocks.